HP Incorporated, HPQ, Stock Analysis, a deep dive into strategy, performance, and future potential. Disclaimer: this article is for informational purposes only and does not constitute financial advice. Always conduct your own research or consult with a financial advisor before making investment decisions. Introduction. HP Incorporated, NYSE, HPQ, has long been a household name in the world of personal computing and printing. Yet in today's rapidly evolving tech landscape, dominated by AI, hybrid work solutions, and geopolitical tensions impacting supply chains, how does HP stack up as an investment opportunity? This deep dive explores HP's strategic repositioning, financial performance, AI integration, market challenges, and potential catalysts for future growth. If you're an investor, or even a tech enthusiast, looking to understand HP's place in the global tech market, this article is for you. Company Snapshot: HP Incorporated, HPQ's stock price as of May 2025, $29.32 market cap, $30.5 billion dividend yield, 4.4% P/E ratio, 8.5 industry, information technology founded, 1939, as Hewlett-Packard, restructured in 2015. 1. Financial performance, resilience amid headwinds. Q1 FY 2025 summary. HP reported Q1 FY 2025 revenues of $13.5 billion, reflecting a modest 2.5% year increase. The company's performance varied significantly across its business segments: personal systems, PCs and laptops, $9.2 billion revenue, plus 5% year. Printing, $4.3 billion revenue, minus 2% year. The rise in commercial PC demand, plus 10%, was encouraging, even as consumer PC sales dropped by 7%. Commercial printing struggled, while consumer printing saw a 5% increase, perhaps an effect of hybrid work habits stabilizing. Margins and EPS. Operating margin, 7.3%. EPS guidance FY 2025, $2.86, $3.16, GAAP, $3.45, $3.75. Non-GAAP. These figures reflect efforts to control costs amidst restructuring and macroeconomic uncertainties, such as tariffs on China-made goods. 2. Strategic initiatives. HP's Future Now Playbook. HP has launched several initiatives to transform its traditional hardware-centric business into a more innovative, resilient, and AI-ready company. AI-integrated product line. HP is positioning itself at the forefront of AI-powered computing. In 2025, it introduced several next-gen devices: HP OmniBook Ultra, Flip, HP EliteBook X series. These models come equipped with AI-driven performance optimizations, real-time language processing, and improved energy efficiency, targeting both creative professionals and enterprise users. HP has also launched HP Print AI, aimed at smartly managing home and office printing through predictive supply orders and usage optimization. Supply chain reconfiguration. Facing geopolitical shifts and rising tariffs, HP has committed to shifting 90% of its US-bound products out of China by the end of FY 2025. Manufacturing is being diversified across Mexico, Southeast Asia, and other low-risk regions. This move should improve cost structure, reduce exposure to trade disruptions, and align HP with the globalization trends shaping tech supply chains. Workforce and cost restructuring. In line with its future-ready transformation plan, HP aims to reduce 2,000 jobs, 5% of workforce, cut $300 million in annual costs by 2025, reinvest in AI, R&D, and digital-first initiatives. While these layoffs drew criticism, especially given the company's profitability, HP argues that realigning its workforce is essential to fund future innovation and remain competitive. 3. Competitive landscape. Standing tall in a tough crowd. Key competitors: Dell Technologies, Dell, Lenovo, Apple, AAPL. Indirect competitor in premium laptops, HP holds a strong number 2 position globally, in PC shipments, behind Lenovo. However, what differentiates HP now is its early adoption of AI across both its personal systems and print business lines. Despite fierce competition in pricing and innovation, HP continues to gain traction with enterprises and education sectors thanks to its reliable service model, vast channel partnerships, and improved supply chain agility. 4. Dividend strength. Income investor friendly for those seeking passive income. HPQ is a stock worth watching. Dividend yield 4.4%, 5-year dividend growth rate 11.65%, payout ratio under 50%, leaving room for further growth. That positions HPQ as a relatively safe bet for long-term income-focused investors, particularly those seeking value stocks in the tech space. 5. Growth potential. The AI and hybrid work thesis. AI in everyday devices. HP expects AI PCs to account for 15 to 20% of its total PC shipments by the end of 2025. With Microsoft, Intel, and Nvidia pushing AI adoption on hardware, HP is well positioned to capitalize on this tailwind. B2B market expansion. As businesses continue to upgrade infrastructure post-COVID, HP is investing in remote work solutions, managed print services, commercial device leasing programs. These B2B moves support recurring revenue streams and reduce dependency on volatile consumer demand. C. Expansion into services. HP is venturing beyond hardware into software and services. HP Wolf Security, Advanced Endpoint Protection, HP Plus subscription models, ink and toner delivery, based on usage analytics, device as a service, DaaS, a bundle of hardware plus lifecycle services for enterprises. The transition from transactional subscription and service-based revenue mirrors successful pivots by companies like Microsoft and Adobe. 6. Risk factors. What could go wrong? No investment is without risks. Here are some key concerns. Slow consumer recovery. Global PC demand has declined sharply since the pandemic surge. Although commercial sales are up, a sluggish consumer rebound could cap top-line growth. 2. Supply chain dependence. While HP is actively diversifying manufacturing, complete decoupling from China remains a long-term challenge. Any disruptions, natural or political, could delay products and hit margins. 3. Execution risk. HP's strategy to shift toward AI and services requires flawless execution. Failure to maintain product quality or security, especially with AI integration, could damage customer trust and market position. 7. Analyst ratings and sentiment. Average analyst rating, whole 12-month price target range, $28, $35 valuation multiple, trades at 8.5x forward earnings, tech sector average 20x. The stock is widely viewed as undervalued given its solid fundamentals, although analysts want to see stronger top-line growth and successful transformation execution before upgrading to a buy. 8. ESG and corporate responsibility. HP ranks highly on various ESG benchmarks. Sustainability. 75% of all ink cartridges made from recycled materials. Diversity. 45% global workforce identify as women or underrepresented minorities. Carbon neutrality goal by 2040. Entire value chain. These initiatives help attract ESG-conscious investors and institutional capital. Conclusion. Is HPQ a buy in 2025? HP Incorporated is a fascinating case of a legacy tech brand reinventing itself amid industry disruption. With a blend of AI innovation, reliable cash flow, and shareholder returns, the company offers value that many of its Silicon Valley peers, often priced at sky-high multiples, do not. If you're a long-term investor seeking exposure to AI-stable dividends undervalued large-cap tech, then HPQ could be a worthwhile addition to your portfolio. However, near-term growth may remain modest, and execution risks are real. As always, balance risk with reward. This content is for educational and informational purposes only. It is not intended as investment advice or a recommendation to buy or sell any security. Dell Technologies, DELL, Stock Analysis, Navigating the AA Era and Market Dynamics. Disclaimer: this article is for informational purposes only and does not constitute financial advice. Always conduct your own research or consult with a financial advisor before making investment decisions. Introduction. Dell Technologies Incorporated, NYSE, Dell, stands as a prominent player in the global technology sector, renowned for its comprehensive portfolio spanning personal computing, enterprise solutions, and IT infrastructure. As of May 17, 2025, Dell stock is trading at $114.19, reflecting investor confidence in its strategic direction and market positioning. In this analysis, we delve into Dell's recent financial performance, strategic initiatives, competitive landscape, and future prospects, providing a holistic view of the company's standing in the ever-evolving tech industry. Financial performance: robust growth amidst market challenges. Fiscal year 2025 overview. Dell reported a strong financial performance for the fiscal year 2025. Revenue, $95.6 billion, marking an 8.1% increase from FY 2024. Net income, $4.59 billion, a 36% rise year-over-year. Earnings per share, EPS, $6.51, up from $4.71 in FY 2024. Operating income, $6.2 billion, a 15% increase from the previous year. These results underscore Dell's resilience and ability to capitalize on growth opportunities despite macroeconomic headwinds. Fourth quarter highlights. In Q4 FY 2025, revenue $23.9 billion, a 7% increase year-over-year. Operating income, $2.2 billion, up 40% from Q4 FY 2024. EPS, $2.15, a 30% rise year-over-year. The company's strong performance in the fourth quarter reflects effective cost management and strategic investments in high-growth areas. Strategic initiatives: embracing AI and infrastructure innovation. AI integration and the Dell AI Factory. Dell has made significant strides in integrating artificial intelligence (AI) across its product and service offerings. The collaboration with NVIDIA has led to the creation of the Dell AI Factory, an initiative aimed at accelerating enterprise AI adoption. This partnership has resulted in the development of AI-optimized PCs and workstations, the introduction of the Dell Pro Max portfolio, designed for AI developers and power users, the establishment of a $9 billion AI server backlog, driven by demand from enterprises and hyperscalers. These efforts position Dell as a key enabler of AI infrastructure, catering to the growing needs of businesses seeking to leverage AI technologies. Infrastructure Solutions Group, ISG, growth. Dell's ISG segment experienced a remarkable 34% year-over-year revenue growth in Q4 FY 2025, primarily driven by strong demand for servers and networking solutions. This growth highlights Dell's ability to meet the increasing requirements of data centers and enterprise IT infrastructures. Client Solutions Group, CSG, performance. While the ISG segment flourished, the CSG segment faced challenges, with a 1% decline in revenue year-over-year in Q4 FY 2025. This downturn reflects the broader softness in the consumer PC market and the impact of component shortages on product availability. Market outlook: navigating economic and competitive landscapes. Economic considerations. Dell operates in a complex global environment characterized by trade policies, ongoing tariff uncertainties, particularly concerning US-China relations, pose risks to Dell's supply chain and cost structure. Component costs: fluctuations in semiconductor prices and supply chain disruptions can impact product margins and availability. Despite these challenges, Dell's diversified portfolio and strategic initiatives provide a buffer against economic volatility. Competitive landscape. Dell faces competition from various tech giants, including Hewlett-Packard Enterprise. HPE competes in enterprise infrastructure solutions. Lenovo, a significant player in the global PC market. Apple competes in premium consumer computing devices. Dell's focus on AI integration and enterprise solutions differentiates it in the marketplace, allowing the company to cater to emerging technological needs. Shareholder value, dividends and capital returns. Dell demonstrates a commitment to returning value to its shareholders. Dividend increase. The company announced an 18% increase in its annual cash dividend, reflecting confidence in its financial health. Share repurchase program. Dell authorized an additional $10 billion in share repurchases, signaling a strong belief in the intrinsic value of its stock. These actions underscore Dell's dedication to enhancing shareholder value and maintaining investor trust. Conclusion: a strategic position for future growth. Dell Technologies Incorporated has showcased robust financial performance, strategic innovation in AI, and a commitment to shareholder value. While challenges such as economic uncertainties and competitive pressures persist, Dell's proactive initiatives and diversified portfolio position it well for sustained growth in the evolving tech landscape. Investors seeking exposure to a company at the forefront of AI infrastructure and enterprise solutions may find Dell Technologies a compelling addition to their portfolios. Note: this article is for informational purposes only and does not constitute financial advice. Always conduct your own research or consult with a financial advisor before making investment decisions. Palantir Technologies, PLTR, Stock Analysis, Navigating the AI Frontier. Disclaimer: this article is for informational purposes only and does not constitute financial advice. Always conduct your own research or consult with a financial advisor before making investment decisions. Introduction: Palantir Technologies Incorporated, NYSE, PLTR, has emerged as a prominent player in the realm of big data analytics, offering sophisticated software solutions to both government and commercial sectors. As of May 17, 2025, Palantir stock is trading at $130.18, reflecting a significant surge in investor confidence. This analysis delves into Palantir's financial performance, strategic initiatives, competitive positioning, and future prospects. Financial performance: robust growth trajectory. Q1 FY 2025 highlights revenue, $726 million, marking a 30% year-over-year increase. Adjusted EPS, 10 cents, reflecting a 43% growth compared to the previous year. Free cash flow, $4.56 billion, underscoring the company's operational efficiency. Full year 2024 performance: revenue, $2.87 billion, a 29% increase from 2023. Net income, positive, indicating a return to profitability. Adjusted operating margin, 38%, demonstrating strong operational leverage. These figures underscore Palantir's ability to scale its operations while maintaining profitability, positioning it favorably in the competitive landscape. Strategic initiatives: capitalizing on AI and data analytics. AI integration: Palantir has integrated large language models, LLMs, into its platforms, Gotham and Foundry, through its AI platform, Palantir Ape. This integration enables clients to leverage advanced AI capabilities for data analysis and decision-making. Notable developments include partnerships, collaborations with Databricks and Microsoft Azure Government to enhance data processing and cloud capabilities. Client adoption: a significant increase in the adoption of AI-driven solutions across various sectors, including defense, healthcare, and finance. Defense sector expansion: Titan program. Palantir's involvement in the U.S. Army's Titan program exemplifies its expanding footprint in the defense sector. Under a $178 million contract, Palantir is integrating its AI platform into truck-mounted units that consolidate sensor data from land, air, and space to provide real-time targeting intelligence. This initiative positions Palantir as a key player in modern defense technologies. Competitive landscape. Positioning in the AI ecosystem. Palantir operates in a competitive environment characterized by government contracts. While Palantir's reliance on government contracts provides stability, it also exposes the company to geopolitical risks and policy changes. Commercial sector growth. The company's expansion into commercial sectors is promising, with revenue from U.S. commercial contracts increasing by 134% in 2024. Valuation concerns. Despite strong financial performance, Palantir stock is trading at a forward P/E ratio of approximately 275, raising concerns about its valuation relative to industry peers. Future outlook. Growth drivers and risks. Growth catalysts. AI demand. The increasing adoption of AI across industries presents significant growth opportunities for Palantir's AI-driven solutions. Defense spending. Rising U.S. defense budgets and global geopolitical tensions boost demand for Palantir's defense-related offerings. Commercial expansion. Strategic partnerships and expanding use cases in sectors like healthcare and finance contribute to Palantir's growth prospects. Risk factors. Customer concentration. Approximately 20 major clients account for 65 to 70% of revenue, making Palantir vulnerable to the loss of key contracts. Regulatory challenges. Data privacy concerns and regulatory scrutiny, especially in Europe, could impact Palantir's operations. Valuation volatility. The company's high valuation metrics may lead to increased stock price volatility, particularly if growth expectations are not met. Conclusion. Palantir Technologies Incorporated has demonstrated robust financial performance and strategic initiatives that position it well in the AI and data analytics sectors. However, investors should consider the company's high valuation and associated risks when evaluating its investment potential. As always, conducting thorough research and consulting with financial advisors is recommended before making investment decisions. Note: this article is for informational purposes only and does not constitute financial advice. Always conduct your own research or consult with a financial advisor before making investment decisions.